Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 129 of today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988, and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. In today's podcast, we'll check out the hottest local housing markets. Yes, there are some, despite the overall decline in housing going on right now. We'll also be looking at some new mega construction projects now in the pipeline. We'll be looking at some weekly economic indicators that can give you a sense of where the U.S. economy and the electrical market may be headed. And these 5 weekly indicators are initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to Champion Fiberglass for sponsoring today's Electrical Economy podcast series in 2025 and over the past 5 years for more than 100 episodes. For the week ending September the 20th, the advanced figure for seasonally adjusted initial unemployment claims was 218,000. That's a decrease of 14,000 from the previous week's revised level. The 4-week moving average was 237,000, and that's a decrease of 2,750 from the previous week's revised level. The unemployment rate for August is 4.3%, and that's in line with the recent readings over the past few months. At the state level, we saw some fairly significant drops in unemployment, and we had 5 states that had drops of more than 1,000 claims. Texas had the largest decline in unemployment claims, 6,901, now standing at 20,132. New York was down 1,880, now standing 12,452. Arizona down 1,300, now standing at 2,492. Virginia down 1,220 claims, now standing at 2,289. And South Carolina down 1,162, now standing at 1,923. We only had one state that was over 1,000 in claims, and as we've mentioned in previous podcasts, those are the ones I do like to call out when we hit the 1,000 mark. California down 714 claims for the week of the 20th, 37,689. New Jersey down 799 claims, now at 8,587. Illinois down 633 claims, now at 9,659. Tennessee down 354 claims, now standing at 3,011. And Connecticut now standing with a change of 287 claims, now at 2,775. One of the more interesting leading indicators and one of the more bullish indicators right now for the overall U.S. economy is freight rail traffic. It's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR, and it publishes this data weekly at www.aar.org. U.S. rail traffic for the weekend of September the 27th was 512,642 carload to intermodal units, which is up 1% compared with the same time last year. Intermodal units are those big box containers that you see on trucks, trains, and ships. Total combined U.S. rail traffic for the first 39 weeks of 2025 is still positive, 19,225,976 carloads and intermodal units, and that is an increase of 2.9% compared with the same time last year. Most of the individual freight categories are in the green, and the 3 showing decline from last year are off less than 2%. With a 6% increase, grain is showing the biggest year-over-year increase, followed by coal at 4.4%, and total intermodal units at 3.5%. Down just a little bit, metallic ores and metals down a smidge at 1.4%, petroleum products down 1.2%, and forest products down 0.6%. I should also mention that with this most recent data being over 500,000 carloads and intermodal, that's actually a pretty good mark, and we've been since the mid-July over 500,000. Since that time, there's been only 1 week under 500,000 in total traffic. If you track the oil market, you're probably familiar with the Baker Hughes rig count, which tracks the number of oil and gas rigs that are operating. This data is available each week by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It gives you a good sense of just how many of the large oil plays are in Texas and Oklahoma and parts of New Mexico, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. The Baker Hughes rig count traditionally doesn't vary a whole lot from week to week on a national basis, and in the most recent data, it didn't vary at all. And then with the data now at 549 combined oil and gas rigs, that's down 36 rigs from last year for a 6.2% decline. The state of Texas was down 2 rigs to 244 rigs, and that's due to a 2 rig decline in the Permian Basin that stretches between Texas and Mexico. In total, the Permian Basin, the nation's largest, is down 53 rigs year over year for a significant 7.4% decline. The price for West Texas Intermediate crude oil over the past year has been spent most of its time tracking underneath the $70 per barrel market, which is considered a pretty good mark. The average price over the last year is $68.22. But as you can see in the chart, we've spent a fair amount of time, and in particular since about mid-year this year, being for the most part under that mark. The other time when we spent a little bit of over the $70 mark was the beginning of the year, right around the new year and going into February. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future activity since copper is used in so many industries. The construction industry is among the leading markets for copper because of its widespread use in wire and cable and copper plumbing pipe. The copper market's had quite a ride this year, and we've spent a fair amount of time over $5 a pound. We're currently right over that again, and that is about almost 50 cents a pound over the year-over-year average, which is at $4.54. But early October, we did nudge right above that $5 mark, and as you can see, in the green line, $4.54 is the average. Yellow line is that $5 mark. Now let's take a look at the housing market. Higher mortgage rates, a lack of starter homes in many markets, and a smaller pool of first-time home buyers are tamping down demand, which typically accounts for 15 to 20% of sales through electrical distributors. On a national basis, single-family building permits are down 6.7% through July for a 63,000 unit decline. It's a different story nationally with multifamily permits, and right now they're actually up 19% through July for a 69,000 unit gain. Multifamily are a little more volatile than single family, but that is still a very large change. Let's take a look at the local markets with the highest gains in single-family and multifamily permits. I wouldn't say that there's any really huge surprises with the markets that are up in the top 10, but with the possible exception of Raleigh, which is a good-sized market, but really more of a medium-sized market compared with some of these others, and it's at the 7,200 mark. At the top of the list, Houston, Pasadena, the Woodlands, Texas market. That's 29,797 permits. It's actually down 6.9% from where it was this time last year. Dallas, also the only other market that's over the 20,000 mark, with 25,823, also down 11.7%. So you'll see there's a bit of a trend here. Large markets, large numbers of building permits, but double-digit declines. That is definitely the case in the Phoenix market, over 15,000 single-family permits through July, 15,713, but it's down 15.5% compared to where it was last year. Same issue with Atlanta, 13,731 permits, down 15%. That's down 2,400 permits. Other markets in the top 10, Charlotte Metro, Orlando, and Orlando is actually showing a 7% gain. The Nashville market, and it's down 6.4%. Los Angeles market actually up in single-family permits at 5.3%. We mentioned Raleigh before, and the large New York metro market, down 5% to 7,000 permits. I came across some interesting new construction projects on ConstructionDive.com and Dodge Construction Network and a Dodge Construction press release I'd like to share with you. Dodge is one of the two premier sources of construction project data that you can see what they have available at www.construction.com. Construct Connect is one of the other major sources of construction project data, and if you need more granular project data than by offering the highlights here and in electrical marketing, electrical wholesale, I would check out ConstructionConnect.com and compare their offering with what you can see in the Dodge data. Now let's take a look at some of these projects. The thing that caught my eye, the construction data in the Dodge release, and also at Construction Dive, were three really huge LNG plants. Construction Dive made note of a service contract award in Cameron Parish, Louisiana, a $25 billion contract, the Monkey Island LNG plant. Looking into on the Texas and the Gulf Coast, a $5.1 billion project. The Woodside, Louisiana LNG facility, also on the Gulf Coast. Gregory, Texas, broke ground in August, as did the Woodside facility. That's $2.9 billion. Some other large ones over the quite large if you're looking at over the $1 billion mark. The Kingston Energy Complex with battery storage, Kingston, Tennessee, broke ground in August, according to Dodge data, $1.8 billion. We had a couple of hospital projects, are very large, $880 million. The Geisinger Medical Center Tower in Danville, Pennsylvania, And again, the rest of these all broke ground in August on a military project, Fort Meade in Maryland, Fort Meade East Campus office building, $666 million. In Hawaii, a large multifamily project, $619 million project. I apologize for the pronunciation. Kauai Place mixed-use residential tower. And also going back in Maryland again, a hospital, $540 million at the UM Shore Medical Center, Easton, Maryland. And we mentioned in Miami, while the multifamily project's going on, but broke ground in August, the Brickell Residences, that's 120 Brickell Residence, that's $413 million. And in Jersey City, just across the Hudson River from New York, mixed-use project broke ground in August, and that is $383 million, the Cole Street mixed-use development. Hope you enjoyed the podcast today. It's available thanks to the folks at Champion Fiberglass for sponsoring today's Electrical Economy podcast series in 2025, as well as for more than 100 episodes all the way back to 2020. Please contact me if there's any other type of economic data you would like us to cover in these podcasts. Our next presentation will be on Monday, October the 20th. Until then, be healthy, be happy. I look forward to chatting with you in 2 weeks.